All right, good morning, everybody. Hope you're all having yourselves a fantastic start to the AM here. Happy Thursday. It's Thursday, yeah. And hope you all have yourselves a great start to the AM here. One thing I want to talk about here before we really kick off this morning, right, is about the basically detrimental impact to taking shortcuts. And what I think the market loves to do and what it is so incredible at is making us feel as if we found a shortcut and that if we take it and we chase it and we go after it, we're gonna get there faster. But in reality, all that we do is we slow ourselves down when we commit to pursuing those shortcuts. And we slow ourselves down, not because they don't work here sometimes, but eventually, right, they slap you around so hard that you get put back to the starting line and you have to start from zero. And so it's the ability to basically stop chasing those shortcuts, right, that differentiates a lot of traders. And the obsession over doing things the right way once versus the wrong way 50 times is ultimately going to be a significant decider over how well, right, or how much money you ultimately make playing this game. And shortcuts, right, are addictive to start chasing. They are fun, right? There's like a dopamine hit to doing it. We all played maybe Mario Kart once upon a time. And we give ourselves all these excuses and use all these limiting beliefs to pretend that our shortcuts aren't actually shortcuts, right? That we're doing things the right way. But when we dollar cost average into losing trades, or we go counter trend, or we trade our impulses, we'll lie to ourselves, right? And tell us that, hey, I'm actually doing what I think is best for me. And then the evidence, right, comes back, slaps us in the face, and reminds us that, hey, I actually was taking a shortcut here, and I'm setting myself up for failure if I continue to behave that way. And so I want to remind everyone, right, that although a shortcut might be appealing, it's like that scene in The Matrix, right, where there's that woman in the red dress. Sure, she might look beautiful. Yes, it might look fantastic. But if you chase after her, that distraction is actually going to pull you away from your long-term goal, and you're not going to achieve the objectives and the targets and the skills, right, that you actually need to become successful as a trader. And the biggest shortcut that I see people take is continuing to obsess over technical problems that are simply just psychological ones, right? When you hear traders talking about how it took them a year, 5 years, 10 years, a decade, right, to figure out how to become traders, it wasn't them figuring out the technical side of the game. It was them figuring out how to manage their psychology, how to manage their mentals, right, how to manage their expectations so that they weren't taking shortcuts on a day-to-day basis. And so I would demand from all of you here this morning, right? Not even just today, but, in trading in general, right? For the next week, month, year, right? Decade, however long you choose you want to play this game for, to make sure that your actions match your words and that you think very carefully about the language you use to describe your problems and how you essentially obfuscate, right, how clear you're actually working towards your objectives. So I don't believe that shortcuts are going to make you more profitable. I think they're going to actually slow you down. I think trying to rush the process, trying to force things, trying to overtrade your way into a green day, trying to overtrade your way to avoid losses, trying to talk yourself into chasing something counter trend because it feels like it might move, is a guaranteed way for you to get set back to the starting line and having to start from zero. And prop firms, right, really make those obvious because you're going to lose, right? And have to restart your evaluation, restart your, like you get funded, you'll get knocked out. You'll have to repass your eval, right? You have to do all those sorts of things, and you'll keep, it'll be like a seesaw, right? Where you go from funded to failed, funded to failed, funded to failed, instead of being able to climb the steps up and create, right, those benchmarks and those new areas of support and establish, right, that trust in yourself that each previous step was a step in the right direction. So stop, right? No shortcuts, no obsession over trying to be the first one to do it. No self-imposed time frames over, I got to accomplish this, I got to accomplish that. Because in the long term, when we place those types of pressures on ourselves, all we do is we exaggerate losses and make them feel worse, and we minimize the quality of a win and make it feel as if it isn't enough. And once we start playing that game and we start to choose that, hey, those are how I'm going to judge myself on a daily basis, then it's a roller coaster, right? That is very difficult to get off of. And it requires a complete 180, right? Over how you view the market, how you view yourself, and the value that you get from your decisions. We talk very often about the value of being a process-based thinker, right? If I do this 10 times, 100 times, 1,000 times, do I have an expectation of being profitable over the course of those decisions? And the reality is that most people, right, choose to pretend that they're process-based thinkers, but in reality, they're P&L-based chasers. And when we make decisions based on P&L reasons, then we no longer are looking at the market objectively. When we lose and we made a P&L based decision, it becomes hard to accept that loss, and then we compound the mistakes and we make things worse than they need to be. When we win and we make P&L based decisions, then it won't feel like enough, because the market will always give us more money. There's always more opportunity. And so we'll feel like we need more and more and more and more and more. And then eventually, right, we'll rug pull ourselves and lose absolutely everything. So if we want to be good traders, we need to judge ourselves on the quality of our decisions, right? The quality of our processes. If I manage my risk like a lunatic, if I wait for pullbacks into my appropriate risk reward zone, if I gamify losing small, if I obsess over closing my positions as my P&L is increasing, not decreasing, am I setting myself up to be successful long term? And then instead of tracking, right, your P&L, you start tracking the quality of those decisions. So how often did I close my trade as my P&L is increasing? How often did I go short on an uptick? How often did I go long on a downtick, right? AKA buying pullbacks. How many of my trades were in my risk reward zone? How many of my trades, even if I won, if I got stopped out on, I would have taken a loss less than what I have expected? How many of my trades did I follow my exact rules to the T, even if I didn't get the outcome that I wanted? And if I can answer in the positive, right, on those process-based questions, and I get addicted to learning from those decisions, right, from studying, okay, why didn't I want to wait for that pullback? Why did I not want to set a hard stop loss? What am I going to do differently next time? Oh, why didn't I want to close my trade as my P&L was increasing at my profit target? Why did I feel as if I needed to hold out for a bigger win? Why was I not satisfied with the $1,000 day? Why did I feel like I needed a $10,000 day? The more that I can study those decisions and find answers, and then find how I'm going to react or make plans for how I'm going to react to the next time I'm at that fork in the road, the easier it will be for me to actually achieve my P&L targets. I've also said this 1,000 times, and I'll say it 1,000 times again. Green days turn into green weeks. Green months turn into green years. Green years turn into FUs to your boss. So if our objective is to create that freedom, and it is to create that level of flexibility so that we can be in total and complete control over our lives, then the only way that you're going to accomplish that is not allowing green days to compound into spiraled moments, by allowing green days to turn into green weeks, by walking away when you're up, by walking away when you're down, and setting yourself up to be able to fight another day. No trader in human history has ever been green 100% of the time. It simply just does not exist. So if we expect ourselves to be perfect and we don't bake in our ability to manage losers and to lose well, then we will always struggle. We will always feel like we're getting our butt kicked. We will always feel as if we are not capable enough of accomplishing our objectives and creating the outcomes that we want for ourselves. And those feelings are self-imposed. They are not imposed by the market. They are not imposed by me. They are not imposed by your partner or your children or your circumstances. They are simply because those feelings occur, simply because you choose to go down the path of P&L self-worth. And so you have to get off of that train, right? At the first station, there is no profitable trading if your self-worth is associated with your P&L. We are all greater than those things. We are all bigger than those numbers on a screen. And they fundamentally mean nothing if we aren't achieving or accomplishing those objectives by becoming the best versions of ourselves that we can be. So what is so rewarding about trading and so rewarding about playing this game on a daily basis is that it constantly highlights to us what our biggest flaws are. And those flaws are going to be unique to us, right? How I react to a loss is going to be different than how you all react to a loss. And so the only way that you will create that long-term success is by being accountable to yourself, looking at the feedback that the market is giving you and choosing to fix it, right? Choosing to study those patterns, choosing to study how I can get better, right? Choosing to study over what I can do differently, choosing to study over my emotional triggers that set me over the edge, and then making plans to overcome those elements. And we have to also realize that we can't overestimate our ability to remember those fine details. That is why you journal, right? That is why you put yourself in situations to study and record and track those behaviors so that you can overcome those pain points and start to notice your patterns easier. The amount of times I've spoken to traders who are consistently making the same mistake over and over and over again, but refuse to journal because they think they don't need it, is mind-boggling. It is a limiting belief that is ultimately going to cost you money and make you give up long term. So I want more from all of you. I want more from that self-accountability. I want everyone to commit to themselves that they're going to stop pretending that they're different, that they're an outlier. No one is, right? There are no naturally gifted traders. You become the result of your habits and you fall to the level of your processes. And if your process is to trust your impulses and pretend that, hey, I don't have to do the work, you will always succumb to those nasty drawdowns, and you're going to blow up your account, and you're going to survive, right? Or you're not going to survive challenging markets. So that's the challenge I'm putting out to everyone here today. My job here, right, is to help everyone accomplish those objectives, right? I tried to share with you the good, the bad, the ugly, share with you how I journal, how I track my decisions, how I try to get better on a day-to-day basis, so you can see what it looks like and apply that to your own decisions and get better. But if your objective here is to take a shortcut and you're looking for the easy way out because you're afraid to confront your own personal weaknesses, then keep looking. You won't find it anywhere. So look within, right? Look for the answers within, and I promise you, you will achieve much more than you could have ever imagined. All right, so with that out of the way here this morning, let's get after it. Let's figure out what we want to do today, and let's put ourselves in situations where it's easy to be green, where we are accountable to ourselves, and where we demand excellence in our own decision-making processes. So good morning, team. Good morning, DTR guests. Let's have ourselves a great day, and let's start mapping things out. So first things first, we've got a relatively busy economic calendar here today with a decent amount of Fed speak. Now, we got Powell speaking this afternoon at 3 p.m. That historically means that we're going to have a little bit of a choppier day. I don't know why he's not just waiting right until markets close. That's like a little bit of a egotistical move. But let's see if the markets want to behave here in any which way, and we can get some follow through this morning. Our base expectation, right? We talked about it was like 13 of 16 days on ES after those like red hammers or green days. And although it wasn't like a tremendous green day, yesterday still was one. So we got increasing volume, high volume indecision. So not exactly a strong indication of trending markets here in the short term. And we're still going to look for a clear resolution of trending PA prior to us being particularly aggressive. So what's the count here on ES? Let's start there. And let's fire through this prep here quickly this morning. Yeah, inside bar on a doji, right? And it's on increasing volume, which for me is like the worst thing that I could possibly see, right? Because if that volume is strong, why couldn't we make a higher high? Why couldn't we make a lower low? It just tells me chop, right? So also means, right, that I need to see a larger volume standard at today's open than what I saw yesterday. So if yesterday's volume wasn't good enough, I need to see more here today if I'm going to be convinced that I do have follow through, right? So then we're targeting, we'll call it 60-40, right, as our starting point, and then we have it mapped out. And then I would say we do have a bear case here still, right? But not a super aggressive one by any means. And again, right, would need to happen on bigger vol than yesterday. Does that make sense, team? All right, fantastic. All right, old ES, or sorry, old NQ. How are we feeling? What's the count here? I mean, I'm starting to feel like I got the spins here with all these spinning tops. Yeah, and it is a 3 for 3 here to the downside, right? Again, still a weak 3 for 3, right? Weak candle shape, still kind of consolidating inside that flag. So I will still have a little bit of flexibility in either direction. If I look at this relatively objectively, right, I've got more dip buyers inside this area than I do breakdowns, right? So it wouldn't be too surprising to see a dip buy off of 2150 again here this morning, and then, you know, kind of go up towards the upper end of the trend line. And it certainly wouldn't be surprising for us to get a breakout here away from this range. So not super optimistic, right? But we'll see, right? We'll see. Again, it needs bigger vol than yesterday's open. And if it's less volume than that, I'll just sit on hands, right? I don't need that smoke. Cool. Yeah, I don't think I need to change the plan here to the downside either. All right. CL, what's the count here? Nice, Jack. All right. Firing through. So 3 for 3 here to the upside. It's like you're waiting for that. And we're looking, right, for a bullish bias only. Pretty good dip buy scenario. We've got the contract roll starting on Monday. So this would potentially be the last really tradable day here for CL. Tomorrow might be a little bit challenging as we see a lot of volume go into then the December contract, or sorry, the January contract. Still got a little bit of time on the indexes. So we're at 69.36 right now. So we'll call it a move towards 70. And then we're looking for a fake out, maybe off of like 69 or 68. Right, so basically like inside this zone. So either off of that like that lower low high, right? So we can use that as an area of support. Certainly would be realistic to think that this thing could then push up higher. And then no bear case here this morning, right? 3 for 3 here to the upside. Strong candle shape, good momentum here relatively. Bouncing off of relative lows off of the Bollinger Band if ever wants to load up. And so we're looking for a breakout now away from those areas. Going to go back up towards that upper trend line. All right, Apple. 2 out of 3 here to the upside without volume. Sorry, with volume. And it's kind of a weak 2 out of 3 here, higher or lower low, higher high. So not fantastic. We need to get over 227 here to the upside. Or to the downside here, right? Probably under, still 221.50. All right, Tesla, Doji, decreasing volume, gap down. So 2 out of 3 here to the downside. Call it a Doji. And so we're looking for a breakdown here under 320 or a breakout above 346. Okay, Microsoft, green candle, increasing volume, gap down. Not a great green candle. A little bit stronger than what we saw on Apple, but we need to get over 430. And then, I don't know if I really have a very obvious downside narrative here. It's kind of a trend line hold. So I'm going to be pretty patient for the bear case on this. Okay, Amazon trend line breakout, nice little bull flag breakout, right? We talked about this maybe behaving like a little bit of a leading name, where the indexes, right, are also flagging. And if now Amazon had that similar pattern, now breaking out on good volume, 3 for 3 here to the upside, this could be sort of that new leader, right, as we see money move away from our semiconductor tickers. So we're looking for a 215 breakout here on this bull flag continuation. Sweet. All right, AMD, 2 out of 3 here to the downside with volume. That's a little bit interesting, right? So what we saw in the run up to the election was basically that semiconductors, the AMDs and NVIDIAs of the world, were the names that were really pulling markets higher when everything else was maybe chopping around a little bit. And now, right, AMD is certainly selling off here pretty significantly, pretty clear trend line breakdown after indexes touched all-time highs. So what that tells me more than anything is that we might have a little bit of like a personality change here in the market, where there's like a stealth rotation, right, away from the semiconductor names into maybe some of our other tech giants. And then we're looking for a 138.50 breakdown, right, or a retest of maybe like 141.50. Okay, NVIDIA, is that an inside breezy? Not quite. Looked like it just made a lower low, but this is a 1 for 3 here, so still consolidation. And we're looking still for that 150 breakout, or now, right, a breakdown here probably under this trend line, so call it under 143.50. Okay, Meta. Weak red candle, decreasing volume gap down. I would like to see a bounce maybe off of 560 area, right? If I'm going to play this range. Basically just range bound, right, between the trend lines. Cool. All right, Netflix. 2 out of 3 here to the upside without volume, right? Decreasing volume standard. And so we're looking for an 837 breakout, right? Or a high vol fake out and go. Okay, and then Google, red candle, decreasing volume, gap down. So 2 out of 3 here to the downside without volume. Would need to crack down under 177.30. Or maybe, right, like a trend line bounce. And then looking for a trend line breakdown under 177. Cool. And then VIX 14.04. Goodness gracious, right? Be any lower. So obviously that makes it hard for us to get a tremendous amount of bearish follow through. But let's see how that behaves. And then Bitcoin, the lunatic. It's on a quest to touch 100K. What a rip higher this has been over the last couple days. So let's see how this thing behaves, right, in the kind of run up here. Any questions here, team? Any questions this morning? All right, fantastic. So I'm going to go make myself a quick cup of coffee, spend just a minute here visualizing a successful trading day, and then we'll jump back on here in a second and absolutely crush today's session. Again, expecting it to be a little bit choppy until proven otherwise, so there's no desire to rush or force anything until things are perfect. All right, so we're back. And again, probably the easiest thing for us to trade here this morning, right, is going to be crude. Because that's got the strongest indication of trending price action on the index level, right? Things have been relatively choppy here recently. Okay, we've got crude oil inventories today at 10:30. So that might be a slightly more delayed time of day trade versus anything else. And again, like we talked about, right? Seeing big volume here at today's open is going to be key. We are seeing that so far on NQ. We are seeing that so far on ES. So that's the question of, can we get good setup triggers here to indicate that we've got some sort of personality change, right? Some sort of shift in the market. Still being patient, no rush here. Okay, so far so slow. Oh. Oh, shoot. I knew I forgot to do something this morning. All right. Good. So far, so slow. I mean, not too much for me to yap about here this morning yet. Technically increasing volume there on that candle. Bounced right off of 610. So I'm going to start to watch this a little bit. Not in a huge rush to trade this. There's still like a tremendous amount of paranoia over how things are moving right at the moment. Okay, better reaction here. If it breaks down, right, we can play ES, or sorry, NQ, right, on the breakdown. But honestly, I'm so paranoid of this, right? I'm so paranoid of this pullback. Because that's just what we've constantly seen here this week, right? Even last 10 days or so. So if this thing continues to give me an increasing volume standard, you know, I'll have some chances. All right, that's increasing. I would say we're probably targeting 6,000 on the dot here now. Right, and Q may be the easier setup to 68, 66. Clearer looking rejection. Okay, so watching here. So you're risking about 11 points, right, as is, which is pretty tight. But again, I'm not rushing into this by any means. I'm hyper paranoid of the fake outs, right? If all I've seen is chop, all I've got is Powell yapping his small little mouth later this afternoon, then I know historically that's probably a chop setup, right? And I don't need to trick myself into thinking that today's a proven otherwise, right? Until I get a clear example of it. And that's a tough pullback to now trust, right, on the old NQ. So where's it set up smoother? Anywhere? Not really. Vic's still hanging out 14 spot 10. It's not exactly tremendous enthusiasm either. You're on this 5-man could then target 21,000 on the dot. Give me a little bit more space. This is decreasing on the 3-man, so I don't want to trust a pullback here on the 3. Again, if I talk myself out of this, I got no problems with that, right? What I don't want to do is talk myself into getting slap chopped, right? It's like the worst possible feeling. I'm already going to have enough stress tonight with Eagles Commanders. I don't need more stress in my life. Okay, right? And it'd be a 22-point stop loss as is. Right? Approximately 23. So we need to see one contract play, right? It'd be one contract. So as is, right, if you're looking to follow along here, your order window should already be set up, right? You should have your stop loss tick. You should have your stop loss location defined. And you can have your limit price set as 74. So then you're looking, right, for either a retest of previous low of day, right, or that elevator upstairs down type reaction. So that's elevator, right? Now I'm gonna look for a little pullback. And again, one contract here only. I might have missed it. Right? Not enough of a pullback there. Again, see if it gives me that pop. I don't know what that word was. Okay, that was pretty fast, right? That was pretty fast. So again, like that hyper paranoia. Let's see how it behaves. All right, that's a good reaction. Again, you can see my mouse here, right? I'm still trying to keep myself from clicking submit still. Okay, sanity checking my order window, right? Make sure everything's set up the way that I want. Again, no rush here. No rush. I'm seeing ES bouncing off of 6,000. So again, have not missed anything here yet, right? I can lie to myself and pretend I would have made money here. But that is not the reality as of yet, right? So no entry here. No entry yet. And that was the right call, right? That was very much the right call to be hyper paranoid about the potential fake out potential. That's a mouthful. And now maybe, right, we could play that reversal off of our dip buy spots, right? And then sanity check. Do we have any 10 a.m. data today? No, sir. Okay. So now we're looking for a possible reversal setup. And the question is, do we go high of day or do we go 2R? I think I can go 2R here. Hasn't made a higher high yet. Potentially. So again, NQ better volume. Everyone understand why there was no entry on that play? Everyone understand why? Yes, no, maybe. We got one response. Looking for hopefully a few more. Yeah, pullback was too quick, and we've got a market that wants to fake us out, right? So we're just taking feedback basically from what we've learned here so far this week, right? From a market perspective. And we're not falling in love with our idea. We're falling in love with the price action in front of us, right? So now we have a possible pullback scenario for a little reversal trade. So stop loss have to be 62.25. Now, if Rusty's watching with us, he'd be telling us buy the stop loss, buy the stop loss, buy the stop loss. So again, if I've seen a fake out in one direction, who's to say a fake out won't happen again? So Kenneth, right, the reason we avoided this downside trade is that we've already seen, or we've seen a tremendous amounts of fake outs happen this week, right? So we almost want to see like bulls fail or bears fail prior to us entering the trade. And without that failure occurring, I'm going to assume that the fake out is going to happen. And then we saw that bulls hadn't failed on that trade because as it made lower lows, when it found support very quickly and aggressively. So there's a little fake out, right, under our confirmation candle low. For me, stop loss would have to be low of day here. Well, inside bar on the old ES. Nothing really going on in CL. CL might be pretty untradeable until something happens. VIX is going to go under 13 here in a second. What a psycho. So we're always going to assume, like one of my favorite sayings is expect markets to behave like they always have until proven otherwise. This week, right, the always has been pull your hair out, frustrating fake outs, right? So instead of allowing ourselves to just having to use our trading profits, right, to pay for a trip to Turkey, I'd rather be overly cautious, right, and save myself the grief, where I'd rather miss a trade, see us getting trending price action returning, and then have the opportunity to be aggressive. Again, not missed out on anything here yet, right? Not missed out on anything. The only way we would have been green here so far is on essentially a perfect entry. Which for sure could have happened. But I don't want to overrate my ability, right, to get lucky. And if the trade is strong, it'll give me more than one chance to enter, right? So this idea that I have to rush this decision is honestly BS. Oh, I got a song stuck in my head. So again, I have everything set up here for a stop loss at low of day. I'm just so far away from pulling the trigger. And I mean that mentally, not from a price action level. Because I haven't really seen anything that indicates yet, right, that we've got a strong amount of bullish continuation post this 948 reversal, right? So I'm just not like falling in love with my thesis here until I see either some sort of bearish failure, right, or some sort of sign of bullish continuation. Now, bearish failure, right, would be that fake out under the low of day, right, and then close back up above. So if we attempt to make lower lows and those lows can't hold, that would be sort of that bearish failure. The bullish, right, would be basically a breakout away from this 3-candle consolidation. Now, almost 10 a.m. here. So plenty of time still in the day. We got data at 10:30, right, crude oil inventories. So it's not over. But again, it's been a doji week, right? All the daily charts. Doji, 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 right? I feel, yeah, like I've said the word so many times that it's starting to sound weird, right? So again, even if you got a quote-unquote perfect entry, yeah, might have been red there for a little bit, right? So far, right, all I've done here so far today is just protect mental capital and avoid getting faked out. That's a win, right? That's a good process win here so far. So if I'm going back, right, to the rant of the day I had here this morning, right, judging myself on the quality of my process, not the quality of my outcome. So far, right, my process and outcome really nicely synced up, right? I've been specific, deliberate, patient, right? Paranoid even, if you want to use that term. And it's kept me from losing money. That's a win, right? I should be proud of myself for not succumbing to the impulses to want to trade or chase price action. And instead, right, I should be proud of myself for trying to be objective, right, and make things binary so that I don't have to get slapped around, right? Like, I don't want to have to call the police for domestic abuse because NQ's treating me bad again, right? No one wants to get slapped around in their home office. Again, we've got some dip buyers, but no real separation away from lows, no real separation away from this confirmation candle. So we're still just chopping around. Okay, better. Still not perfect. Maybe starting to build up like a little bit of a supply zone here. Yeah, so those red lines, Norm, are 2x whatever the size of the opening range is. So they're just kind of like pre-made profit targets. So if the opening range here is 35 points, that red line is 70 points away higher and 70 points away lower. So they're targets based on implied daily volatility. Again, still no indication of strength here. So time to get another coffee. Be back in a second. Alright, so still no entries. No entries here. Not until after crude oil inventory, Suresh. I don't see any signals here. It's also a 3 for 3 to the upside. So I'm not going to go counter trend on it. Ooh. 30 seconds here. Wouldn't say that's a great looking candle. No thank you, right? I would say for now. If it was maybe outlier volume, I could have a slightly different discussion. Or if it held above 2150. But for now, not the case. So again, I'm not missed out on anything here so far today. I'm in my second most profitable position, right? Which is sitting on hands. And I got zero problems doing that. Like if you have to take a trade every single day, it's not a good feeling, right? So we're not here to get that like withdrawal symptoms, right, of not trading. Because withdrawal symptoms only lead to drawdown. So we control that dopamine, right? We control our reaction to the information we have in front of us. And if we have to literally sit on hands, sweet. If you got to close your brokerage software to protect yourself from overtrading, sweet. If you got to go give your dog a big belly rub so that you feel less anxiety about the market, awesome. Go do it, right? But don't allow yourself to get tunnel vision on something that has not moved in 20 minutes just because you're craving action, right? We're better than that, truth be told. Woo. Again, More indications we've missed out on nothing. Who can tell me why we don't have a reversal scenario on ES when we have one on NQ? Who knows why? I'll let a few people answer before I respond. Yeah, it's the lack of volume on the confirmation candle. So for sure, better candle shape, better volume profile, right, at that 948 versus, okay, good candle shape, but decreasing volume and then drift down. So I'm not looking for fake outs under low of day because I have no bullish confirmation. Woo. Coffee is hot this morning. No, it's all good, Jack. All good. Yeah, no clear confirmation, Aaron. Spot on. Again, still nothing. Yeah, Topher, this is disgusting, right? Jeez. I'm getting dizzy just looking at that. So yeah, so far I don't feel like I've missed out on anything. We're at our possible dip buy spot for CL, but we're 13 minutes away from data. So, I think it's an easy sit and wait. NQ's in a 50-point range in the last 30 minutes. Absolutely, Topher. Absolutely. Or if the soup Nazi from Seinfeld was a trader. No stop loss for you. Okay, so there's that fake out lower again. Good decision here so far. It's 10:30. News at 10:30, and it's from Forex Factory here. Crude oil inventories. Oh, and it's at 11. Okay. So now we're getting a possible breakdown scenario here, right? Time to focus up again. We have it on both ES and NQ. So let's see how this candle closes. Okay, so maybe a fake out. And that might be maybe more the setup. There's a lot of stuff going on here. It's not great close on the 3. Looks better on the 5, but 5 I would want a deeper pullback. So I could do like a 124.50 stop. So in general, Frodo, right, the economic data sources that I will use is the Market Watch economic calendar and the Forex Factory economic calendar. And I'll check both just to basically make sure that there isn't one missing over the other. So, I mean, if I'm going to be looking for a trade here, right, and I'm playing this pullback on this 5 min, VWAP would be a target, right? Then that's 19 points away from my ideal stop loss location. That would allow me to get the sizing that I want, right? Get me that one contract worth of risk. And I'd be able to justify that trade, and I'd be targeting, you know, about a 100-point move, which is awesome, right? What I like about VWAP is binary. Right? It's either it'll happen or it won't. And so for that, I appreciate it. Yeah, absolutely, right? So, I mean, I have to adjust to shifting market dynamics. As much as I want to be aggressive and take 1,000 trades a day, it's also expensive to keep getting your butt kicked from the same type of fake outs, right? It's exhausting, too, to see most of your trades have the right thesis. 83, 84% of my trades that I've studied have been in the correct direction, and then I just get faked out before the move happens. So that's like infuriating, right? Like that's the type of PA that makes you go one tilt and makes you want to break your rules. So you just adjust. You don't make it personal. Okay, what do I need to see that's different? Worst case scenario, I gotta wait a lot later in the day, or for deeper pullbacks, or be more conservative with my techniques. No worries. We'll get periods where the market returns to behaving like a sociopath. And I'll be ready to take advantage of that too. See, in general, right? Trading is a constant evaluation of the information that you're getting, and then adjusting and adapting, right? Then improving and studying and refining, right? Like, I don't really think that, like, an edge is only sharp if you keep sharpening it, right? If you try to do the same thing over and over and over again with a knife, it eventually will get dull, and you'll have to I mean, it gets dangerous when it's dull, right? Like, you're more likely to cut your finger with a dull knife than a sharp knife. And so it's about constantly refining, constantly trying to get better, constantly trying to improve. Yeah, I know, Suresh, but I'm not interested in going short, counter trend, and into data. So it's just counter system. I don't care, really. It's not to say that if you took it, awesome, right? But it's just against my rule. So my plan here today was bearish NA. It being at $69 is not going to change that. I don't care. Like, it's got nothing to do. I'll probably want to see a failed breakout above it, right? So, like, Euphoria breakout above it. And then what we have here, right, is like this spot basically being our wick rejection zone, right? So it would be something along those lines. So at this point, I'm going to start setting up my order here. Stop loss 24.50. 21,124.50. That's a long way to go. And then VWAP right now is 102.50. So that's 22 cents. That's $480 a contract. So I'd like to see above that. Maybe like a 105, right? Something like that. I mean, touched and sold, but I'll still be patient here. I don't need to rush this. Best case scenario is inside that red box, I would say, right? Which is like a 108. Okay, so again, still watching here, right? Still watching. I've not missed out on anything. No, it's short, Suresh. We're looking short. All right, you can see here, red line stop loss, right? White line profit target. So that's set up, right, for more of a short than a long. And also you can see in the Discord, right? So in the setup alerts channel, I've been, yeah, breaking down my thoughts here, right? So the information is always available to you. Not here to make my process hard to follow, right? I'm trying to be as transparent as I can be. Yeah, and it hit VWAP, but it didn't quite hit exactly what I wanted here yet. So again, I'm being specific with my trading plan here, right? Either it hits 108 or it doesn't. And at this point, okay, maybe a bit of FOMO, but yeah, I don't care, right? You combat FOMO or you combat that trading anxiety by being specific with your trading plan. So either I define exactly what I'm looking for, or I allow my emotions to trick me into decisions. right? So if I'm not super specific with how I plan on trading, then if I'm greedy, I'm going to jump in too early. If I'm fearful, I'm going to miss trades. So you combat that by working backwards to a specific entry price, and then you go from there. And if I miss it, I miss it, right? So if I do the same thing every single time, if I'm specific and binary and methodical in my entry logic, then if I miss trades, then I'll know which part of my process is broken and what I need to change, right? So if we think back to how trading has gone this week, right, with all those fake outs, well, because I have the same technique, right, for how I place my stop loss each and every time, I know, okay, my stop loss right now isn't working as well as I want it to. And so if I change my stop loss technique and have a little bit of a different change there, then I should be able to get the success that I'm looking for, right? And we made that adjustment yesterday on CL, and it paid us out tremendously. But if I'm doing a random thing on each decision or on each opportunity, then I hide, right, what is broken, and I hide what is working. And so I can't make those adjustments on the fly, right? Or after I see something broken, because it's unfamiliar over what that actually is, right? So that's really the value of being consistent in my approach, is it doesn't hide from me the patterns that cost me money or the patterns that make me money. But if I'm, I think this is going to go this way, or I think this is going to go that way, or XYZ, right? Well, I can't really recall those patterns, or I at least elongate my learning curve and noticing them. And so it becomes very challenging, right, to find any long-term success that way. Because intraday, I always have a bias of wanting action and wanting to make money. And that's going to hide a lot of issues, because it's going to show me a lot of trades in a random way. Right? It's why I'm systematic in my approach. And I'm not systematic because it necessarily makes me the most money intraday. I'm systematic because it allows me to make the most amount of money long term. Right? Because if I'm wrong, I can figure out what's wrong. If I'm right, I can figure out what's working. And then I can fix things point by point instead of having to guess what I need to change. And in my experience, what I have felt to be wrong with my trading is rarely what is actually wrong with it. Right? Because my emotions, my greed, my ego, my fears, they're going to hide those variables from me. So for now, like, we're 10 points away from my entry, and I'm still kind of like shooting the breeze with you guys. And I'm literally not going to start looking for an entry until we're above 108. All right, so I got everything set up already here. I've got everything good to go. But I'm like not putting any pressure on myself here to click the trigger, right? Until now we're starting to see a reaction that is appealing. Is that understood? Everyone get it? All right, so, okay, I know above 108, I can start to look for an entry, and I can look for that rejection, right? Where I've seen the rejection happen here so far today. All right, so instead of putting pressure on myself to rush a decision, I can be pretty objective and slow things down and hopefully set myself up to be green. So still just watching here. My limit order is set at 108. So if it is like 112 and I click submit, I'm going to get a fill at 112, right? With no worse fill than 108. But again, still have not seen that rejection here yet, right? It's been elevator up, not elevator down. So, yeah, I'm patient, right? Don't need to rush into this. And that's better. Okay, that's a good rejection. So slowly but surely looking for a gentle pullback here. And the deeper pullback I buy, the easier it is for me to be green long term, right? So this idea that I have to rush this decision is incorrect. Yeah, potentially, Ben, for sure. Yeah. Again, this feeling that I missed it doesn't exist, right? Not missed out on anything here yet. Okay, so watching very closely here. Still no entry. Better. Okay, gonna start looking here. All right, guys, I am in average price short 111.75. It's just one contract here. Nice, Suresh. Let's see. Hopefully this thing can break down for us. We'd love to see this thing get in under 100, right? Great entry. Great entry. Hey, so far so good here. So far so good. Come on. A little bit early here. Let's see if he can die. All right, I took the stop, guys. Took the stop. $251. $251.69. Nice. So I did everything I possibly could have, right, to manage my risk there. Be very patient. That's okay, right? I'm still happy with that process. I lost far less than my max loss number. And okay, I might be getting faked out here. Theme of the year, or theme of my life here this week. I'm not going to allow that to trick me into now revenge trading or doing something stupid, right? I mean, mean, very mean. Hey, if you can't laugh at yourself, Frodo, who can, right? So again, I took a loss there. That was half, right, of what my max loss number is. Wasn't too aggressive, right? I'm very easily within one trade of being green here. So again, right, I'm being proactive, not reactive in my ability to manage my trades. I'm like, this is pretty low volume, right, as this thing is climbing up. So maybe we'll get something here. But I have absolutely zero problems with that trade. Dun, 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 dun. question is, what would be the hardest trade right here? It'll probably be the fake out higher and then break down again, right? I mean, hardest probably mentally. I'd be careful with that, Suresh, right? We use hard stop losses for a reason. If a trade is strong, it'll always give us another chance to enter, but I'm not going to really encourage this dollar cost averaging. If we're wrong, we're wrong, right? If our entry timing isn't good, what else are we wrong about? We can't have the hubris to think that our idea is correct even if our timing is wrong. So I will not encourage any dollar cost averaging. That works really, really well until it blows up in your face. Yeah, we're on the same wavelength there. Yeah, maybe. But I'm not going to encourage it whatsoever or say that it's a good way of managing risk. I strongly disagree with that. It might be a chop, right? But your dollar cost averaging counter trend. Right? It's been a pretty bull trend here. So I wouldn't do that, right? In choppy, slow markets, when the VIX is 13.83, you can very easily get that low volume grind up without really much resistance in the way. So I would be, yeah, very reluctant to do so. And then even if you think back to your trading history, Suresh, right? When you're trading with Apex, you got a payout denied for dollar cost averaging, right? Because it was one of their broken rules. So I'm not sure why you'd want to keep doing that, right? When you've already been denied a payout for that reason. 'Gain team. I do not encourage or support dollar cost averaging. I will not, you will not ever get me to say it's a good thing. Not with highly leveraged products. If you're doing that for your long-term investment portfolio, no problem. But with highly leveraged products, you're asking for trouble. And there's no information that'll change my mind on that. %, Craig. I love that. Right? If you get on the wrong train, get off at the nearest station. The longer it takes you to get off, the more expensive the return trip will be. It's very well said. It's just purely ego to not want to let go of losing trades, right? Purely ego. Because if a trade is strong, it'll always give me another opportunity to enter, right? I don't have to hold out for hope for my very first entry. And what I think about dollar cost averaging is that it becomes a habit, right? So if you get bailed out on one trade where you do it and it costs you money, well, you're just going to get addicted to doing that because you got bailed out, and you just keep doing it, keep doing it, keep doing it until one time it doesn't work, and now you're full port on a position that you don't agree with, and it takes a 5-point move to stop you out, right? Yeah, 100% Tara. Good to see you in here. I can take so many $250 paper cuts, right, before I ever blow up my account. That makes it significantly easier for me to be green long term. I don't care about the day-to-day result, right? I mean, obviously I do, but I'm not putting I'm not going to put too much stock into it. Impossible for me to answer that question, Ben, until I've back tested it. So any answer I would give you would be just pure speculation. So I can't answer that. Okay, again here, right? Increasing outlier volume, big breakdown, right? We have another chance to play this. Okay, so stop loss 21,105. We're looking for elevator down, right? And now looking for a gentle pullback here. Still not a gentle pullback. Much better. All right, guys, so I am short 97.25. And it's 2 contracts. So we can break here. Come on, get under 90. And there we go, right? Nicely green on the day here. And let's see if this thing can keep breaking down. That's literally all it takes, guys, right? So we lose small, that's all it takes. So ego is the enemy, right? It's gotta die. Gotta die, come on. Alright, I am out. Man, that is harsh, heartless. The freaking fake outs. So I still think I have a possible setup in play here. Well, that was mean. Ruthless. So you have to be a 109 stop loss. Gosh, I can't believe I got shaken out of that too. Great entry, Rusty. 104. Yeah, beautiful. Well, see if he gives me the aggressive here again. Well, you're in good shape here, Gabe. You're in good shape. In general, I'm not saying this is how you feel, but on those trades where I feel like I need to get lucky, that's kind of like a way of me admitting that I'm wrong, and it's worth closing and taking it. Again, if this thing sets up again, there will be another chance. Man, I gotta work for a living this week. I was looking at the Top Step leaderboard yesterday, and the top trader on there has a win rate of 34%. So just a good reminder that win rate's pretty irrelevant if your other elements are sharp. There's a great line by Jesse Livermore. You won't know what the market's going to do until you place a bet, right? Which is where that, like, if you feel like you need to get lucky, probably means you're wrong, feeling comes in. I'm scraping cigarettes off the street here tonight, Rusty. That's not true, but down 490. Oh yeah, it's a great book. My favorite Jesse Livermore fact, and this is for the degenerates, is that his granddaughter is Brandy Love. Now, I would not Google her on your computer at work, but that's his granddaughter. Okay, so now stop right on this pullback technique. It would have to be 128.50. Which would mean smaller sizing. So Livermore, great trader, but definitely a flawed human. Again, looks like it's maybe flagging here still. I'm not ready to walk away yet. Oh, 100%. We're all flawed. Okay, might have another chance here. And again, I'll go single contract. Come on. Back to under my original entry price. Cruel and savage. And again, I'm doing everything in my power. So I'm not optimizing for a big win, right? I'm optimizing for a small loss, right? As frustrating as these paper cuts are, they're a lot better than taking max losses. And so everything is built off of that, right? So here's your flag. Come on. Nice work. Hey, it's not bad. 600 bucks, right? There's that 108 again. See if this can close under 100. Yep. So maybe we could do now a stop at 116.75. It's getting stuffed. Trying. So still got here, got a chance. Today is Thursday, right? Yeah. We're looking for it to crack the trend line, right? And then use the trend line as our entry target. Okay. So 103.25 would be the stop. Getting close. Too fast. Almost starting to get into Costanza territory here. Definitely got stuffed at that 1725. This is trying to frustrate me. Again, wicks on, wicks on, wicks. Wicks on, wicks off. Wicks on, wicks off. So 10 points, right? As is. 1925. Those are Livermore years right there. Oh, she's a maniac here, Suresh. Keep bouncing between stop losses. Bulls are really struggling. The Bears aren't winning either. You can dance if you want to. 38.50 would have to be the stop. Interesting. Very interesting from CL. Faked off of 68.50, right in the middle of our spot. Yeah, you're in good shape. Alfred, you're in great shape. Yeah, personally, I'm not interested in shorts on CL here today. But hey, if you're making money, I'm not going to argue with you. $11.30. Cannot find a stop loss I trust. The question is 1 breakdown, 2 breakdown, 3 breakdown. Will VWAP hold? I might have a better thesis to the upside. Capitulation. Can't seem to break down under 100. Trend line support, right? If you go like that. Huh. Feels like the bounce is the better setup. See how it reacts to VWAP here. Yeah, much better. Stop would be 2102. Points. All right, guys, I am in long. 21-108-25. Still in. So stop loss is 102. Oh. Come on. Spread did not cross my stop. Right here. Okay, it's got to go. Here we go. Come on. I wanna fly like an eagle. Keep pushing. Keep pushing. Come on. We're close. Okay, that's green. Let's see if this thing can keep pushing. Come on. Get through 120. There we go. It's got to hold 120 here. Got to hold 120. All right, great shape here, team. Great shape. Let's see if this has got some more legs here. Nope. Stop loss is when it crosses the spread. So spread on NQ is 2 ticks. So I want it when the bid crosses, not when the ask crosses. If you go into the Discord, Frodo, well, you just have to set it up manually, right? So it's stop loss plus the spread is how I do it in my order window. If you go into the Discord, there's a video where I describe how I do that technique. It's techniques for avoid getting faked out. All right, so let's see if this thing can keep running here. Okay, that's 12. Let's see if we can keep going. I'm kind of tempted to just close and run, to be honest. There's a part of me that wants to do that. Come on, come on, come on, a little bit more. Get past 30. It should be the most recent video too, Frodo. Oh, I agree. It's exhausting. Okay, 123.75. Come on. It's increasing volume. Not maybe the way I wanted that candle to close. $127.50. Okay, next pop I'm going to close, I think. So if he gets through 30. Okay, 131, 132. 134. All right, guys, I closed at 135, all out at 135 on those 3 contracts. Woo! Holy. And one thing I really wanted to make sure I did here, right, was close as my P&L was increasing, maybe a little bit early. But $1,600, I will take it on that trade, right? Oh, golly Moses. So that puts me at a little over $1,000 on the day, and that is now looking like it was an excellent decision. Oh. So, just a little over $1,000 per account. And I'm very happy with how I closed out as my P&L was increasing. And that was about as close as it goes. Nice work. Hey, $1,200 ain't anything to complain about. Should put you green on the day, right? And breathe. And breathe. I'm like kind of jittery here. Nice work, Juan. Nice work. Good man, Jack. Yeah, a bit frustrating. I get that. Again, portfolio now sitting at all-time highs, right? Oh. Yeah, great question, Topher. So, honestly, it's a little bit of superstition more than anything. I found myself getting very emotionally exhausted, having to bounce between one screen to another screen to another screen for all three of my executions. Where just like operationally, I was really struggling with it. And when I dealt with that, if you remember, go back to beginning of October or whatever it was before I went on my little trip. Yeah, I just kind of felt like operationally I wasn't where I needed to have been with that. And so I switched it back. And yeah, I feel very vindicated here now. I'm green on the day here, Mallory. Yeah, green on the day. Not going to be placing any trades. I have no more active open positions. Closed this most recent trade at 35. So right around here. For a nice win. So up $1,000 on the day. And that trade was worth about $1,600. So good day. Had to work really hard today. But again, feel pretty justified by that. How'd your day go, Mallory? Truth be told, you didn't miss too much. Very choppy session so far. Very, very choppy. So any questions here, team? Any questions? No, Top Step X is its own platform, Craig. Top Step X is its own platform. I have a My Funded Futures account, which is my 6th funded account that I trade through Tradeovate. And then I also have my interactive brokers, which I manage for my dad and my sisters, and obviously myself. Top Step X is built on the TradingView platform. But it doesn't have all the same functionality. So what I essentially have here, I'll send a screenshot one day, is basically like an assembly line of order windows on my 3rd monitor. And yeah, I'm basically just making sure setting everything up to be the same on all 3. And then, yeah, executing as it goes across. Nice work, Rain. Really nice work, dude. $1,000 on the day. Let's go. Yeah, it is. On NQ, spread is almost always 2 ticks. On ES, it's usually about a tick. But I feel a little bit jittery after today's trading. And one thing that I did that was maybe a little bit unique. I think if I look at my NQ stop loss here today, that's probably the tightest amount of risk I've had on NQ probably all year. Right? Being 6 points, give or take. Call it 7 points with the spread. And so, I mean, there's almost like 2 counters to trading this chop, right? Really tight risk, really small follow through, right? But larger position sizings or smaller position sizing, wider stops to survive more oomph. But I'm proud of you all for being green here today. This is not an easy day. And any day where you can go 1 for 3 and be green, it's a day to be proud of. And okay, yeah, feel very vindicated in closing that NQ trade where I did. Whew. And yeah, this is an and breathe moment now for sure. So it'll be from entry point. Right, so if I'm gonna rebuild this, it would have looked like something like this. Something like this, right? But I'm not looking, I don't want to go 15 points. So, you know, something like that, right? Midpoint of these candles. Basically, trend line test, right, was the entry target. So, retest of entry sizing, right, from trend line to stop loss location. was how I was mapping it out. So anywhere between green line and red line is a justifiable risk reward entry. Anywhere under that, right, I can go bigger position sizing, tighter risk. And then alternatively, or not alternatively, objectively, I'm trying to find a bounce spot, right, that I can rely on. So I got a little bit of slippage on my order, maybe a little bit late. And yeah, the deeper pullback I can get, right, the bigger sizing I can get. But I'm always trying to find, I'll call it like my Alamo, right? So even hypothetically right now, let's say that I was looking for a short. Now I'm not, right? I'm not looking for a short here. And if I was doing something like this, right? This would be my appropriate risk reward ratio to justify. So VWAP would be like a pretty obvious spot where it spits out something specific, or like previous low of that candle, right? Like that 107.50. So I would pick, it's hard to say which one I'd pick in the moment. But like previous low of candle would be a pretty obvious spot, right? To look for an entry price. So then sizing would be based off of that zone and then looking for a breakdown. So the difference between the green and the red is, do I have a justifiable risk reward? The deeper pullback I can get within that risk reward context, easier it is for me to not only be correct, because now my risk reward, right, if I buy halfway up, now I'm getting 7-to-1 risk reward, right, instead of 3.5. And then I can also get bigger sizing, right, on that trade. So it's like stacking up probabilities of being green. All right, guys, any other questions here? I got a one-on-one call I got to jump in on. Yeah, no worries, Jeff. No worries. Again, good working man's day today here. Maybe I should have been looking short. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. But in the meantime, have yourselves a great day. And Steven, just jump in on that call here right now. So apologies for the late start. But yeah, let's all catch up here in a sec. So talk to you guys soon, and I'll see you tomorrow for what should hopefully be a strong finish to the week. Peace.